Hey, what's up, everyone? Today is November 20th, Monday, and over in the US, it's going to be a shortened week just because of Thanksgiving. And so, what is going on with my camera? I don't know. Oh, well, camera's flickering, but whatever. I don't know what's going on. Weird. Anyways, it's going to be a shortened week, so not as much movement going on. Probably not as many big swings, especially on Wednesday onward. But let's go with the markets. So starting off the S&P 500 right here. The main thing we're looking at was looking for. Let me put this on. Looking for a pullback, and that never happened. And it's just using the 15-minute chart right here. So go down to the 5-minute chart. It created some more trade, the ABCD trade pattern. So we'll be, looking for that when it comes down. That's not even good enough to do. Maybe let's see, it's potential. Yeah, that's good enough. But we'll worry about it when it comes down there. So yeah, just looking for a retracement pattern down here. You can see if we go back to the 15-minute chart, it's been in a straight uptrend ever since its low of Friday, October 27th, and ever since it's pretty much been going up. I had a little consolidation and then going up over here. So next trade setup we have going up here is looking at this retracement trade. Let me change it to that. There we go. So if it continues to go up, we'll start looking at shorting at around 45, 77.50. Done about 45.72. We'll have other contracts on there as well, which I covered in other videos. So that is the main one there. We did have another right here. We did have another expanding triangle trade set up. See that right there? See that right there? But as you can see, nothing went and broke it. But one thing I've been looking at all over the weekend was if there was a pitchfork one that could work. And after messed around with Andrew's pitchfork a ton, and it's still not doing what I need to do the majority of the time. I'm now looking at what's it called? Hold on, let me see something right here. That didn't work out. Oh, so what I had been looking for is this to break up right here. So sometimes it didn't happen, sometimes when it did, you go far away. So one thing I started looking at, and what seems to work right here, is you're still using the 4 points. So right here, let me just take these off right here. You can see we have the semaphores. There's an orange, 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 and then red. And to have red, you have to have an orange because the orange semaphore is the third level. Oranges are the second level, greens are the first, which I don't use. So here we have, there's the swing point high, swing point low, swing point higher high, swing point lower low. So then what you're doing is you're looking for price to close above, since we're looking for a long right here, since the last point's a low point, close above the midline right there, which you did. And so once it does that, you can go long right there. And then the target you're looking for is the yellow line right here, which the yellow line is the just 1.5 for it. And so like on this trade, for instance, getting right there. Yeah, if you were having to get out somewhere right in there, 18 points, but it didn't go up there and hit it yet, and then it came close, but not close enough. So then, if it wasn't this trade, it comes down, hitting live right now, because you just gave up, 15 to 20 points of profit right in there. And then see it find some support down here, going into the close of the day. And then the next day continues up and then gets that big shot up and finishes it right over there. So like this trade, for instance, say you stuck around it the whole time right there, would have been an amazing trade. You're looking at 33-point gain right there, but obviously not every trade is like that. But that is the one thing I'm looking for these expanding triangle setups for it. We still have it in there. Let's see if we can find one. I don't think, no, there may be one. I think there's one here. Yeah, so this other trade setup we have is just using decreasing triangle, or whatever you want to call it, just triangle trade. And so, there's your swing point high right here, swing point low, then you have a lower high and a lower low right there. So use those 4 points, and all you do is connect the dots. So then when price breaks out either way, and the thing is, right here, this orange dot isn't formed right here yet. It's probably not forming until it gets like closer right here, or at least not until at least this is broken out of it right there. So what you do is when it breaks this line right here, right there, you're looking to go long for it. And as you can see, price, when it closes above it. So we'll say, well, it did right there at this candle, because let me show you something when I'm talking about these semaphores. They don't form as the next bar is going, because you see this one is all the way up here and there's not a semaphore that has been formed yet. We can see, well, we'll see if we add in the green semaphore. Well, that's not it. We'll see if we'll add in the green, if the green one has formed yet. There is one right there, but there isn't one up here, because to have an orange, you first have to have a green. So there was 2 that got formed, but no orange one up there yet, and a green one still hasn't even formed up here yet. So we're still could be a little ways away to get an orange one from getting on there. And so that's just what I wanted to show, because as you can see, it's not in real time where these semaphores form. So that's what I'm saying. This one right here, like this orange one, is not formed by the time these down here are, are close below it. So it's probably not formed closer to something like, maybe it's even come around down here or something like that. But, it did get a chance to get back in close to the entry point for it. So what you do is when you do see that close, you get the 4 semaphores formed on it. Then all you do is take the swing point low to swing point high, change this to, yeah, that's fine right there. Or what about, yeah, it's even better. So change it. Your target look for is the 1.146 up here. So you have, the close outside of it right there, and then target is just the 1.146. So closed it, say right in there, target's right up in here for a gain right there. So that's just the triangle trade. That one is a lot more, it doesn't happen as often as the expanding triangle from what I've seen, but when it does happen, it's a pretty quick trade pop up there for it. So definitely looking for that one more. So yeah, going into tomorrow for the S&P 500, you can see today so far has been a blowout day. If we use the swing, the extensions from previous day, and see it found some resistance, but then just blew right through it on this candle right here. I don't know if the news came out or what, I haven't checked, but blew through it. So unless we get a pullback for the close of the day, which is another, it's about an hour and 20 minutes to come back down here closer than that, we're going to consider this a blowout day here for the S&P 500. Going into the Russell 2000 right here, you see a couple notes over here talking about all this stuff. Get to some of these lines, make it easier to see. So yeah, here is just another, if we go to the 15-minute chart for the Russell, this is just another triangle trade. You see swing point high, swing point low, lower high, lower low. And then you have the 4th one finally gone right there. So not sure if you've been able to get in, like maybe in this candle came back down for it. If this orange one had formed, you might have been able to for it, but definitely that one was formed right there at that point. But the target we're looking for up here is just this 1.146 level. So if we do get a sell up here by the end of the day, look to get back in and try to ride it up to there. But also one thing to know right here is typically, which I guess I could consider this trade to be complete as well, is just because this bar, because one of the kind of safeguards I have for it is that when the once price breaks out, like right here, say breaks out, close above right there, there's your long, and the target's up there. But if price reverses, which it did on this candle, and come and hits the lower area while these are still formed, then you just have your exit right around the entry area just to get out. So it's not like a fake breakout and it's going around the other way. So if that had happened, you're looking at about a 5.5 point gain with about a half point loss right there. So this one could be considered done, but it was just a weird one. But that's how it works right there. And then if we apply to these over here for this on the 5-minute chart, using the shift pitchfork, Because if we do the normal expanding triangle, there's swing point high, swing point low, higher high, lower low. So there's the 4, broke out of it right there. You do the yeah, there you go. Use the Fibonacci levels of the 200 and 2.236 for it. And since you're going the reverse way, you have to subtract 100 for it to equal the 200% going the other way for it, since it's going in the negative direction. So X is 2.236. Went up there and hit that if you're doing it that way. So then, as well as seeing what the shift pitchfork holds, 1, 2, 3, 4, broke above it, went up there and hit that target for that one right there. And the reason why I chose a 1.5 for it, obviously there is profit left on the table, is after just looking at a lot of patterns, or look for this pattern and seeing where the highest profit potential is before you get, or retracement down the other way. The 1.5 level seemed to be the sweet spot for it, where you pretty much, not say guarantee, but you're very confident it's going there and get hit, or at least very close to it, before price could potentially move around the other way. And then you have another one right here, 1, 2, 3, 4. So if you use the shift right here, and this would be going to the south side of it. So then when price comes, breaks below it right there, that'd be your entry bar. And then you're just looking for it to come down to the yellow line right there. And you see, it took a little bit of a while, used as resistance, and came back down and hit it right there. So that's why I do that. And then it took off the other way for it. But then if you did, which it never even broke it up there. So yeah, see, that was the note I had for it, that I was to remind myself about it. So yeah, right now, we're in this potential long trade for it. Technically, I would consider it to be complete, since it did hit that criteria for it. So, we'll just say it is complete for it, since the price, after it did close above it this way, it did come down and hit the sloping one going up this way. So you would have gotten in right around just north of it right there, and then out right around the entry level, just to be safe. So, we'll just go ahead and say that one is done. And then just going into tomorrow, it looks like today is not a blowout day like it was in the S&P 500. It looks like it's been right into the extension high level right there between the purple lines. That's where it's found its resistance for the day. So I would expect it to stay, within, to finish up on the high side, but stay somewhere within this box right here between 1809 and 1816 for it. Dow Jones right here. You can see here was one of the trade setups right here using these semaphores, 1, 2, 3, 4. It was on the 5-minute chart, the one I was looking at. Yeah, right there. See, price closed above it right there. So you use these two right here, and this is the target you're looking for. You see, price went away a little bit, but they came back up there, and literally just within this 5-minute bar, went up there and hit that target right there for it. So the Dow's popping off a little bit compared to the, no, actually it's not. The S&P is higher than it, so it's kind of lagging. The only one's ahead of us, the Russell right now. So anyways, we consider that one being done, but we do have one thing to look out for, is we do have, what's this thing up here for? I'll need that up there. We do have one down here to the downside. So using, let's see here, 1, 2, 3, 4 right here, came back down, closed below it right here. And so the exit we're looking down here is the 1.236. And so that's one of the reasons why I was looking at other options rather than, because you get short right here, and now the price is all the way up here. You're hating life right now. So that was just one of the reasons why I'm still looking at it from being a potential option, because I have seen a couple times go away from it, and it does reverse back and hit this target for it. But for right now, I really like the shift pitchfork a lot better. So, if you do the shift pitchfork for this 1, 2, 3, 4 right there. There's a 4th point. Get this out of the way. Close below it, goes down there and hits it at the yellow line right there. So that one's done. And then you have 4 right here. 1, 2, 3, 4. And so use the shift pitchfork right here. Right there's fourth point, close above it right there. We're looking for the exit in the yellow line. Bam, just hit it right there, and that one is done. So right now the shift pitchfork is looking like, compared to any of the Andrew Pitchfork options, looks like the way to go right now, and even better than just the trend line break with the Fibonacci exit. Still gonna leave this one on right here. Let's see. Wait. Let's see if it works. Exit. So we're still gonna wait and see for this one if it does come back the other way and hits it. Goes too far away, I'm not going to, because I'm not going to risk it. And for the daily extension levels, we're looking at hitting right off the daily extension high level. So we'll see if that's going to hold, or it's going to pop off some more and for it to be a blowout day. But my guess would be it would sit somewhere within the box at just slightly north of it. Going on to crude oil, we can see up right here, it's hitting off the 38% of a retracement trade and coming back some. Oil's had a big gain today, over 2%, but it's done in the trade. We're waiting for it to hit the 50% to initiate the trade for it, so we're still looking at that. And going over to the 15-minute chart, not a whole lot. It's just been big swings the past 3 days. Yeah, this big, huge move down, and then the next day, inside day, you see it's inside the previous day right there. Huge move up and did another follow through for it. I was testing out another trade right here. Took a nice little loss for that one. I was trying to see if you can use the previous day's high and low, and then treat it like a retracement trade, like you do from the ABCD, have a retracement one, but you could not. And so got rid of that one. Won't do that one. But from the ABCD trade, see there's A, B, C, D, and to have the C point, it has to come up at least to the 38% line for it. No, excuse me, at least to the 50% line for me to take that trade right there. And that's why I wait for that one right there. But you know, oil's just in a strong trend up right here. For the Nasdaq, some stuff right here. These are all ones I was looking out for the pitchfork right here. I'm not going to use any of those because I'm not going to use Andrew's pitchfork, just using shift pitchfork. And what we have down here is a couple more of the expanding triangle trades. But again, as you can see right down here, that if we use the Fibonacci exit level, so 1, 2, 3, 4, price came down below it, initiated the trade. But the problem with it is target. Where's that thing? There's the target right there. Actually, I think it's on the 5-day chart where this was. Yeah. So 1, 2, 3, 4 came broke below it. Here's the target. Look for down here. We'll look at that. Never even came close to hitting it. Now price is gone all the other way. I did miss a trade today. Look at that. I did miss a retracement trade, unfortunately, this morning. I don't know why I missed that, but as you can see, came up at the 50. That'd been the first entry, and then down at 38. That's your exit. So it's said and done 60.5. Even though it hit the 61.8 and came back, you just take the first entry to the exit. But if it doesn't hit the 38, then you get in the 61.8, your exit moves to the 50, and but if it continues to go up and has to hit those exits, 78.6, you get in there with at least double your first contract right here, and then your exit slightly below 61.8. But as you can see, that retracement trade is set and done. So let's see what this would have looked like, because this Fibonacci trade is not looking, trade setup is not looking very good right now, so I'm getting pretty close to scrapping it. So if we used this, let's see what this looks like. So 1, 2, 3, 4. Came down, closed below, definitely closed below there, came down and hit it, bam, done. So instead of, it made nice 30 points on the Nasdaq, rather than now it going completely against you right there. So, you know what, I think I'm pretty much going to go over and just use the shift pitchfork rather than the trend line break and then the Fibonacci extension level. And so then we have another one right here, expanding triangle, 1, 2, 3, 4. So we use the first 3 points. 4, price came broke above it. There's your entry level right there. I'm not serious, you may closed above it, not just broke above it, closed above it. Here's your target. And it just hit it all the way up here. So it broke out right there. Low profit, low profit, low profit, and loss, profit, and very nice profit up there. So yeah, I think the shift pitchfork seems to be the way to go for this thing. What did I highlight this stuff for? Oh, because there's another expanding trend right here. 1, 2, 3, 4. So we'll use the first 3. Okay, 1, 2, 3. There's the 4th point. So we're looking close above it. There it goes. Hit it right there, and we're done. So today for Nasdaq, been definitely a blowout day for the Nasdaq market. Right there. We want that. We want extensions. And so it did find some resistance right around the market opening time, and then used as support for the extension high level, and it's a straight blowout day today here in the Nasdaq. This has created a really nice retracement trade set up right here. Whenever price decides to come back down in here, that's a really nice retracement trade set up for it, and so that is the Nasdaq. It's been higher the past 3 days in a row. Last but not least, going into Bitcoin for longer term time frame, looking at the weekly market right here. Still looking at the Elliott 5-way move going up there. Let me change this real quick. The target I have for it is around $78,000. So it is in a nice little uptrend right now. Let's see from right here, bottom left going to the upper right. So Bitcoin is in a nice little bullish market right here. Going down to the daily chart, see if anything's going on. Well, close to being expanding, but not quite. And just a bunch of A, B, C, D trade setups right here. You can see there's a B, C, D. So we go to A to B for the setup. Came back down to 50 up to 38. So that one is done. Put that thing on there. Yeah, I don't see any expandings. Oh, here, no, that wasn't one either. So, yeah, Bitcoin's looking bullish right now. So anyways, that's it for today. Thanks, and talk to you later on the stream, or the recording. For the stream, still going to keep it open here for a little bit. Just because what I want to do here. Need that thing. Oh yeah, that was another one I was looking at right there. 1 hour charts in it. Oh. I need this stuff. Let's get this one. Would this have been a really nice retracement trade set up? So there you have the A, B, C, D's way up here somewhere. So price came back down. Oh yeah, that'd been real nice. 50, 61.8, good little 8.5 point move right there. So really nice. We have one right here too. Let's see what that would look like. Going over here. Yep, 50 to 38. So that one's done. Move. So yeah, I really need to look at the hourly charts. Keep those in my back pocket for when price breaks those levels. Here's another one over here. So that would look like. So also what I'm doing for this is not just showing myself, or not just trying to show everyone that, or anyone's, if anyone ever watched this, that all these trades are set up. Is that what I'm actually looking for is trying to see when it doesn't work. Because if it doesn't work, I'm going to scrap it and not use it. Now sometimes you get a little like weird, like you'll get real close to hitting it and then go up enough to take it out. I'll consider that one to be done, but I'm waiting for it to be like price just blows through it, or basically just blows through it, doesn't even stop at all, and wouldn't have hit any of those markers for it, and then I'll just take it out. So really what I'm looking for is basically trying to break it, trying to find where somewhere it definitely did not work for sure. But right here it worked, 78.6 up to slightly above 61.8. Because much better to be safe than sorry with these. Here's this one over here. It's even up high enough yet. Yep. So it hit the 50 down to the 38 right there. So that one's done. Real nice one too. Yeah, real nice. I'm trying to hit at 7. I guess you could have had 7. See oil. Anything long term? Oh, here we go. Here is Yeah, so we're definitely going to be looking for, let me hide this thing. Here in oil, this is the ABCD trade. I mean, I can even put this on there. A, B, C, D, right there, ABCD. And you see from the B to C went up at least to the 50%. So then when it creates a D point, then we're looking for the trace and hits back up here. So when price gets up another dollar plus up to this area, be a great short opportunity for it. There's 50, 61.8, 78.6 right there. So look for some resistance come up here in oil between 79 and 81.50, some type of, at least, I'm not saying it's going to completely stop the trend up, but look for some type of at least a little pullback within there. Yeah, I got a big one up here. Yeah. So anyways, just want to show those out. I think it's going to finish it for now.